Hello, and welcome to the LA Venture Podcast. This is Minnie Ingersoll, host of the podcast and partner at TenOneTen. TenOneTen is a seed stage fund here in LA. All opinions expressed on this show by me and my guests are solely our own. Hello, as always, this is Minnie, but today without a guest. I am sitting in my laundry room where I record by myself today, which feels like a fitting close to this effed up year. Today, I have pulled together just a few highlights from some prior episodes. Luckily, and despite everything, 2020 did have some highlights. For me personally, getting to record this podcast was a huge highlight of my year. I pulled some highlights from Kira Nortman, from Mark Suster from Upfront, Mark Mullen from Bonfire, Jesse Draper, Courtney Ream, and many others. But there were so many other episodes that I really liked. D.A. Wallach, if you care about life sciences, Mike Palink, if you care about media tech, Ariane Schutte, Ben Wallace were both amazing fintech guests. Anyhow, let's jump in with good advice to founders from Kira Nortman. She says that getting a VC's attention is not about doing a stage dive after a panel, trying to cram your company into a 2-minute elevator pitch. It is about building a relationship.
There's one person I can think of who did this so well and initially started by saying, oh, here's an interesting company in LA. Have you heard of it? And I hadn't, and it was kind of interesting. And then said, here's another interesting company in LA. Have you heard of it? And then said, hey, I'm going to be in your neck of the woods for 15 minutes. Can I just pop in and say hello? And then all of a sudden they're pitching you on their company, and you're like, wait, I'd love to learn more.
Deb Benton has so many insights on consumer investing. In this clip, she shares what she considers good margins and what she looks for at Willow when they are leading seed investments into consumer companies. What line items are you really looking at to understand whether it's a healthy business?
I'm really looking for 70 point plus in product margin, at least scaling to that. Some of these categories can be over 80 as well. That's fantastic. It also happens to be that those categories, which makes them even more attractive, the return rates on those categories tend to be low. So accessories tend to have a very high product margin. They tend not, because there's not a fit involved, except for footwear, they tend not to have high returns. Beauty, skincare, personal care, grooming products, they tend to have a much lower return. And again, this is why we probably have an even tighter set of criteria around apparel. It's hard. Returns tend to be much higher, particularly in categories like dresses. You know, returns can be anywhere from 35 to 50%, which is crazy. And it really, really upsets the income statement when you have those kinds of returns. It also affects LTV and repeat purchasing because you tend to have, more dissatisfaction on the consumer side.
And sticking with seed stage traction advice, Mark Mullen shares what he's looking for at Bonfire when evaluating B2B traction.
Back to the point of having traction, we want to make sure they have traction that is relevant, because a lot of times young companies have maybe their friend is the CTO at some company and they're their first customer. Or maybe they're selling a product that wasn't really the right, it was a kind of a custom product, which is really not the product they're going to sell or be able to sell on a scale basis.
Peter Lee from Embark is a deep tech or frontier tech investor. So I was curious when I talked with him how he thinks about IP and patents.
We definitely like companies that have more defensible proprietary technology at its core. And our definition of it, because, does that mean they have a patent or not? It's more of, we use a lens of if there is a smart team of engineers who generally know the market you're in, could they go in after hearing what you're doing or seeing a demo and replicate it in under a year? And our view is if they can do that, it's probably not defensible enough. So for us, IP and defensibility is more around how easy is it to replicate and how much competition there will be. For us, we're less sort of set on having to have patents. I think it's more important later on down the line when you have M&A. A lot of corporations really like to have a patent portfolio.
And Scott Stanford, founder of Acme, and before that, founder of Sherpa, has some advice for VCs.
So when a founder's pitching you, it's so tempting to be like, oh my God, you're right. And if you do that, you can do this, this, and then pull a 180 and then do this and turn that corner. And the founder goes,
Alex Gurovich from Javelin has a great Medium post on why founders should give reviews of their board members. In this clip, Alex talks about this board review idea and adds one of the lessons that he learned from his own founders.
I actually think all board members are guilty of this. You don't understand the impact of some of your asks and requests to entrepreneurs, right? You might like have like a random question that comes up and like, oh, what was the product decision behind this, right? Why did you guys decide to do this? And it's just like a haphazard question that you ask the entrepreneur. You don't then think about the workflow that you set off at that company.
From my own team, Eric Cochravan gives me feedback on my approach to deck reading. Wait, when you read a deck, I usually just flip through, like I skip the first like 5 slides. Like I skip most of the pain point usually.
Yeah, I've learned not to do that. I used to do that. I used to just skip to the end, see the good part, and then come back to the beginning if I'm interested and try to read through it. But founders spend so much, not all founders, hopefully founders spend a lot of time on their deck, and they want to guide you through a story. And I will often realize that I've misinterpreted what they're trying to tell me.
Back to Mark Mullen from Bonfire, who shares what he likes to ask founders when he meets with them.
When founders come into my office, or if I go see them, of course, we don't open the deck. We do not open the laptop. I don't let them do that, to be honest, just because if you can't tell me what your company does in 2 minutes by looking me in the eye, it's going to be hard for you to really raise the money. And so I love to spend time understanding who they are. And I ask questions like, what did your mom do? Do you have a sister? Was she older? Was she more aggressive than you? Was your brother a better athlete? I start to figure out, and they're, in fairness, they kind of look at me sometimes like, what? What are you asking? But I really want to understand who they are.
To Mark's credit, when I first met him, he asked me about my brothers and sisters. In that same vein, Jessie Draper cracks me up in this next clip with her advice for getting people off their talk track.
I'd be like, how do I get them out of their box? Like, what could I? So then I would throw these crazy questions out. I'd be like, do you like horses? They're like, why are you asking me if I like horses? Like, I don't know. I don't ride horses. I'm like, no, I'm not asking if you ride horses. And then they would sometimes roll with it.
Back to Scott Stanford from Acme. He shares what he's seeing a lot of today in LA and why he's looking to invest in things a little bit more daring.
I see all kinds of really cool early stage startups, but not surprisingly, given the DNA of LA, is some of them have to do with branding, like kind of a corner brand, the next fill in the blank drink, nutrition supplement, whatever, and you can make a lot of money investing in those things. Hard to see the next GNC being built. Hard to see the next Coca-Cola being built. Of course, there are the breakouts, but oftentimes the exits for those companies, if there is an exit, will be an M&A, a couple $100 million M&A. And that's not going to do what we need to do for the economics of our fund.
So do you think that lends you to investing in people who are a little, I don't want to say crazier, that sounds unfair to your founders, but
frankly, we're crazy. So it's the pot calling the kettle black.
Sticking with consumer goods, Courtney Ream from M13 talks about how not to overthink things. Here's his advice for what to do if you have a consumer good and want to test if it will sell.
For physical testing of products, I love what I call the farmer's market approach. Like we had a whole chapter about this in our book of like, sometimes you literally have to take your product to the farmer's market, but at least have that mindset. Like there's a new social media platform that they're beta testing at UCLA. And they say that 50% of UCLA freshmen are using it. I'm not a freshman and I'm not at UCLA, but I know where UCLA is. So I got one of our analysts yesterday to drive down to UCLA, stand there on campus.
And I heard some good pre-traction stories as well. Here's Alex Gurovich again on why he invested pre-launch in Masterclass.
He said, hey, I want to create this online learning platform that will allow people to take classes from the best minds in the world, the best, the geniuses in their categories. And my initial reaction was, well, that's nice. It's a nice idea. I'm sure lots of people have had that idea. How are you actually going to do this? And he slides a piece of paper over with 10 names on it. And these are amazing names, like James Patterson's on there, Serena Williams, and many others, Wayne Gretzky. And he's like, see these names? They've already said yes to me.
I also really enjoyed the episode with Ariane from Core Innovation Capital. He's a very thoughtful fintech investor whose mission is to democratize prosperity and empower everyday Americans. If you could start a company, what would you start? What would it be solving?
I I think I'd want to start a company that employed a lot of people and paid them a great living wage and built an ESOP in a world where ESOPs don't really exist, so that people could really build intergenerational wealth as part of a normal working class gig.
I asked Michael Tam from Kraft what surprised him about being in VC.
It's also, I think, more sales than I sort of anticipated, which I'm not really good at.
Yeah, and sales in all directions.
In all directions.
And it was just a ton of fun getting to know people. I appreciated how open my guests were and how great this LA community is. One of my favorites, Dana Settle.
I was gonna ask about email responsiveness.
I hate email.
Oh, because it rules your life, because it feels like a to-do list that someone else created for you.
Yes. Yeah.
Yeah.
I actually like talking to people. I like it when people call.
Oh. Yeah.
I like talking to people. I mean, I don't like having long conversations.
Another great guest and friend crush, Jessie Draper, opens up about criticism by the press.
They were horrible to me. And so I got so much bad press from that show in the beginning that I was just like, I don't care anymore. You guys are just mean. Whatever.
Well, I'm sorry to hear it, first off. But I also kind of think when you say you don't
made me so much stronger.
And I talked to a lot of my guests about diversity. Here's Mark Suster.
Where serious pools of capital are aggregated, that's where women need to step up and have leadership roles. And I think more people in our industry are going to just have to get out of the way and help make that happen.
Marcos Gonzalez from Vamos Ventures is another investor I'm very excited to get to know. Here's a short clip on LA demographics that I found interesting. Do you know what % of LA is Hispanic?
Yeah, it's certainly over 50%.
That's what I thought. That's crazy to me.
Yeah, and if you, being good former business school students, we look at the data in terms of cohorts, and we look at 65 and above, and 40 to 60, and so on. That number, changes, and certainly when you look at the older demographic cohort in this city, it's a lot lower percentage. Hispanic. But when you look at, 18 and below, it's clearly over 50%. And if you look at, 5 and below, so, kids and, going into kindergarten, it's probably something, I would bet, something around 70, 75%.
And every single one of my guests was bullish on LA. I think we take that for granted in LA, but you would not hear the same commentary from Bay Area investors talking about the Bay Area. Eric Pokrovon talks about what he's seen.
I check Urbanize LA every morning. And I've been reading it since it was a blog spot on Blogger called Building LA, 10 years ago. If you're curious to see how the city is physically shaping, they are surfacing every new, potential and ongoing development architecturally in the city. And actually a lot more of that has become tech related, right? They keep covering, the new Netflix studio or Scopely's new building in Century City. I think you can tell that the LA startup scene and the LA tech scene is really here because now it's, tech companies that are getting the coverage in real estate news. The port of Long Beach is, I believe, the largest port by container volume in North America. And then the second largest is the port of LA. And functionally, they're the same port. They're just on opposite sides of the city line. There are only so many cities that look like Manhattan and downtown San Francisco. Most other cities, at least domestically, look like LA, and LA is the biggest version of it. There are very few companies that you can't build in LA.
I love that and agree with it. There are very few companies that you can't build in LA. And one more wise thought on LA from Scott Stanford that I'll leave you with.
To be clear, there's a great kind of emerging ecosystem. But it's emerging. And I get asked this question a lot, when I've spoken in different countries and different cities of how can fill in the blank be more like Silicon Valley? And, you hear different versions of the same story. And that is, it's like a coral reef. It's like a forest. It's like any other ecosystem. You need a bunch of ingredients and then you need time. And so I do think LA has all the key ingredients. And I do think LA is absolutely trending up, but we've got to be patient.
Well, that's a sort of funny note for me to end on, since everyone who knows me knows that I'm not patient. But on the growth of LA tech, I can be, because I like it a lot how it is today. Thanks.